All right, let's jump right in. We're talking about a company that's trying to do something pretty radical. They're not just building another app, they're trying to fundamentally change how private companies raise money by owning the entire system from the ground up. And this quote, which is from their own pitch deck, really gets to the heart of it all. What they're saying is that a lot of the flashy financial tech companies you see, they're basically just a nice new coat of paint on a very old, very clunky system. And this image just nails the concept. Think about it like this. Your business might be that sleek, modern building, but it's really just reflecting the old castle behind it. You don't actually own the foundation. You're just paying rent to all the old school players, the banks, the brokers, the compliance firms, and believe me, that rent really, really adds up. So, let's dig into this whole problem of paying rent. We're going to break down exactly why it makes raising capital so incredibly expensive and just inefficient for so many growing companies. Okay, so here's the key idea you need to understand: fee stacking. See, when a company wants to raise money, it's not just one simple transaction. Oh no, they have to go out and hire a broker, a transfer agent, an escrow service, you name it. And every single one of those is a separate company taking its own slice of the pie. The fees just stack up, one on top of the other. So, if that's the problem, what's the solution? Well, this brings us to a really different way of thinking, a radical new approach from a company called Prairie Holdings. Their idea? To build the full stack. Their whole strategy really boils down to this one simple but incredibly powerful question. Instead of paying all these different people for a piece of the process, what if one company could do it all? What if you stopped paying rent and just bought the whole building? And they've even coined a term for this model, CapTech. It's exactly what it sounds like, a mix of capital and technology. The goal here isn't just to build some cool software. The goal is to use that software to bring every single step of the financial services process under one roof. We're talking full vertical integration. Now, this is where it all clicks. It just lays out the difference so clearly. On the left, you've got the old way, juggling multiple vendors, those stacked fees we talked about, a bunch of systems that don't talk to each other, and all of that leads to really fragile profit margins. But on the right, you have the integrated CapTech model, one platform where all those costs become internal, creating a smooth, unified workflow. The result? Much, much higher efficiency. And this puzzle visual, it just perfectly captures their whole vision. You see, each piece represents a critical part of a company's financial journey. Raising the money, managing the investors, even providing a way out down the line. Their goal is to own every single one of those puzzle pieces. Okay, so it's a great theory, right? But how does it actually make money? Let's get into the nitty-gritty of how this integrated model is supposed to work as a revenue-generating machine. So the whole customer journey is basically a circle of fees that feeds itself. First, a company uses their platform to raise capital, and boom, Silicon Prairie gets a success fee. Then they offer to manage that company's investors, and that's a recurring fee. After that, they can offer a place to trade those private shares on their own system. Yep, another transaction fee. And the final piece of the puzzle? Banking services, of course. Let's make this tangible. Here's a real-world example from their deck. An accelerator called Ascend Angel Network licenses their tech. Right off the bat, Silicon Prairie gets $12,000 a year just for the platform. Then, when Ascend's companies raise money, SPHI gets a cut, over $55,000. And on top of that, they get another $17,700 every year, recurring, just for managing the investors. You see? They're getting paid over and over again from the very same client. And this all leads to their ultimate end game. Remember that missing puzzle piece? It was banking. See, by owning their own bank, they can stop paying all those fees for things like escrow and fund transfers. Instead of being their single biggest expense, banking actually becomes another profitable part of their own machine. It's a total game changer. Okay, so the vision is massive, it's ambitious. But what's the reality on the ground? To really understand this, we've got to look at both sides of the coin. The potential upside, that's the bull case, and the very real risks, the bear case. So let's break this down. The bull case is strong, right? They capture multiple fees from one client, and the regulatory licenses they need to get, like being a broker-dealer, create a huge moat, a massive barrier for anyone else trying to get in. But the bear case is just as serious. We're talking about a heavily regulated industry. One slip-up with compliance could be fatal. Plus, they're up against some big, well-funded competitors, and their revenue is tied to the fundraising market, which, can go up and down like a yo-yo.
All right, let's zoom out for a second. What could a model like this actually mean for the entire industry? Are we looking at the future of how private companies get the capital they need to grow?
While the company's own projections are definitely not shy, they're forecasting their net revenue to jump from about 1.2 million in 2026 to almost 10 million by 2031. It's a super bold vision that really hinges on their integrated model being able to capture more and more of the market over time. And this final image, it just perfectly sums up the end game. This isn't just about being a tech company or a bank or a broker. By owning every single piece of that infrastructure, the real goal is to build an impenetrable financial fortress that can serve a client from the very first dollar they raise all the way to their final exit. Which really leaves us with the big question, doesn't it? Is this all-in-one, full-stack approach the inevitable future of financial technology, creating a way more efficient market for everybody? Or is the insane regulatory burden and the sheer complexity of it all just a risk that's too big to take? That, right there, is the billion-dollar question.